We are now to commence the meeting of the Corporate Governance Group. Please can the webcaster start broadcasting this meeting to the public via the Council's YouTube channel, Braintree District Council Committees. This channel has been set up to make sure that anyone can observe our democratic meetings. Please therefore remember that this meeting could be watched anywhere at any time by anyone with access to the internet. There is a slight delay between the meeting and the broadcast of around 30 seconds. Webcast officer, please can you commence the broadcast and confirm?
Hello.
Hello, Dan, are you able to confirm?
Yeah, did you hear me? It's good. We're going.
Yeah, lovely. Thank you.
Okay, cheers.
Okay, brilliant. Good evening and welcome to this meeting of the Corporate Governance Group. Before we commence with the proceedings, I can confirm that the Council has adopted some basic etiquette rules for its remote meetings. For ease, these are as follows. Only speak when the Chairman invites you to do so. Members, please let the Chairman know when you want to speak through the chat function. The Chairman will introduce speakers in the order that the request to speak was made, unless there is a point of order which will be prioritised. Please minimise all distractions while you are in the meeting. Members are asked to mute your microphone when not speaking and consider turning off your video to reduce interference with the audio feed. Please bear in mind that there may be a lag between speaking and the other attendees hearing you. Presentations, images or video footage should have been made available to you in advance of the meeting and will be visible on screen. Please indicate via the chat function if there is a problem. When referring to a report, please quote the page and paragraph number. There is no private business for this evening. However, members are reminded that it is their responsibility to make sure that their venue and connection is private. If you lose connection at any point and are unable to immediately rejoin, then please call the meeting facilitator. Contact details have been provided. Please only use the chat function for the purpose prescribed for requesting to speak or for a point of order. The chat function is subject to the Access to Information Regimes, FOI and EIR, and is also subject to data protection, rules of defamation, and the Council's Code of Conduct. For this meeting, the councillors are identified by a prefix of CLLR before their name, and officers in attendance are identified with the prefix of officer. There is a minute taker for this meeting, along with 2 meeting facilitators. I can confirm that the meeting is quorate. The Corporate Governance Group consists of the following members: Councillors Houston, Hume, Johnson, Mann, Santomoro, Van Dalken, Wallace, Walsh and Walters. The officers for this meeting are Kim Cole, Head of Governance, Jessica Mann, Governance and Members Officer, Trevor Wilson, Head of Finance, Phil Myers, Financial Services Manager, Angie Mitchell, Audit, Insurance and Fraud Manager. My name is Chloe Waite and I will be the meeting facilitator for this meeting. I will now hand over to the Chairman, Councillor Van Dalken. Thank you.
Thank you very much, and welcome everyone on this stormy night to the Corporate Governance meeting. First on the agenda is apologies for absence. Do we have any apologies? I think Councillor Walsh is he a standing apology?
Chairman, I understand that standing apology is now been lifted, so he was expected this evening.
Okay, thank you very much. But we are quorate, as Jessica said. Right. Second point 2, declarations of interest. Do any members or members of the group have any disclosable pecuniary or non-pecuniary issues? No. Thank you very much. We move on to the minutes of the previous meeting. This was on the 19th of November 2020, which I hope everyone's read. And this was, to jog your memories, the code of conduct and the standards investigation, the special meeting we had. Are there any comments on that, or can we approve that as a correct record of the minutes of the meeting?
Move them as a correct record, Chair.
I beg your pardon?
Move them as a correct record of the meeting.
Right. As there are no other comments, we'll take that as a correct record. Thank you very much. Item 4 is public question time. I don't think we have any public questions, so we can move on quickly to the first paper this evening, monitoring and finance, key financial indicators up to the 30th of November 2020, which Trevor Wilson will be presenting.
Thank you, Chair, and good evening, members. As we just introduced, this is looking at the financial position of the Council up to the 30th of November. Usual way of laying out things in the report. To start with, the general revenue account. The budget for this year is just under 15.25 million. The expected spend was just over 11 million. As at the end of November, it was 10.83 million. So we're slightly under budget at this particular time. Obviously, the COVID situation has had a significant impact on the Council. And to help meet that, the government has provided significant funds to local authorities to help alleviate the financial burden of the COVID effect. On page 5 under B, I'd make mention of our actual assessed position. This was in a return that we made to the government on the 11th of December. Additional expenditure we think is just under 1.2 million. A significant amount of that will be in respect of what members took a decision about, the payment to Fusion, although there are some possibility of additional funds in respect of Fusion, and there's a process currently underway to apply for funds to support leisure where it's been outsourced, as we have done. So there is some further monies that may be available, and we'll find out in the matter of in dueness of time. The main area that we are having an impact, as we've reported before, is on income. Just under 2.4 million we estimate will be down in the current financial year. So somewhere about 3.5 million on the revenue account. In terms of collection of council tax and business rates, then we are forecasting that those will be down in the year, but obviously the amount will be outstanding still, and we'll be trying to come to arrangements with those people that owe money to pay that across the next year and the following year. So very little is written off, as we'll find out later in the report. But in terms of the government support, just under £2 million for the current year from the emergency funding to the council for 4 tranches of payments. In addition to which, there has been the income compensation scheme by the government. So the first 5% of a budget shortfall is met by the local authority, and then shortfalls over that particular level is then funded 75p in the pound by the government, and 25p to be met by the local authority. And you'll see the note is that we have applied for just under 700,000, which takes us from April through to November. The first payment was been received of 411,000, and we're waiting to hear about the second application that we've made for 289,000. So a fair amount of support for our loss of income coming through that. And then there'll be a final claim for the year, which will be submitted in April, which will then draw the year to a close in terms of that particular scheme. This is obviously just a snapshot at November. as you're aware, we do a more detailed look at the financial position on a quarterly basis, and the accountants and the service managers are currently looking at the position to the end of December, and then that will be reported through to Cabinet in due course. So more detailed sort of up-to-date information will be provided at that time, as I say, with a more detailed look. But briefly, in terms of salaries, by far our largest area of expenditure, just under 19 million for the year. We are experiencing a variance, a positive variance at the moment for the year, and that's even after we take an account of the efficiency factor, which looks for achieving vacancies, and there have been a number of vacancies held during the year or have been difficult to fill because of the situation, and that so that is having an impact on our budget, that you know, we're not expending so much on salaries. Glad to report that our rental income stream on our properties that the council leases out, commercial and industrial, are holding up very well, and the rental streams are on budget there. So and all properties remain occupied as at the end of November. So some really a good position to be in there. Moving to capital, just under 14 million spent to the end of November. Substantial money starting to go now on Manor Street, so just under 6.5 million been spent, and Horizon 120 being the other major scheme, 4 million spent. The Suffolk Waste Partnership, there was an investment of 1.2 million right at the beginning of the year, and then the pedestrianisation scheme in Braintree is currently well underway, and just under 900,000 spent as at the end of November. Moving briefly to council tax, the actual collectible debit for the year is just under 98 million, so substantial monies. Obviously, we don't have all of that in respect of our services. The majority goes to county, but in terms of the collection rate, 75.74% at end of November. It compares to 77.15% this time last, or that time last year. So marginally down, but not unsurprising given the position that we find ourselves in, or our council taxpayers find their positions in that. But a substantial amount of money has been received, 74 million. Business rates, similarly, that's slightly down. The debit is just over 26 million, and we've collected just over 19 million. In terms of write-offs, they still remain predominantly in respect of previous years, where you know, realistically, they're not going to be collectible and that. So, but in terms of that, there's not significant sums that have been written off at this stage. In terms of the sundry debts, the figure is quite significant there, 4.3 million. That's boosted because there were a couple of significant invoices raised towards the end of November, and they particularly relate to Essex County Council, and in terms of land at Horizon and a deposit there. So that's why that figure has increased significantly in that respect. But obviously, say the bills have just been raised, and we'd expect those to be paid within the normal sort of timeframes of 30 days, and that so shouldn't reflect on the balance at the end of the year. There's also an update on the council, our investments. The dividend yield, 440,000 in terms of the pooled funds, so the returns are not as good as last year. That's not to be unexpected, and we have made for allowances there in respect of and taking that into account. We expect that to be about 300,000 under what we've had in previous years. But the annualized rate at 3.47, it's normally nearer 5%. In terms of the value of the funds, it's pleasing to report that obviously the fluctuations in the market are going to impact on the valuation of the funds. That has now gone positive, so the valuation of the funds is now 19.1 million for the 19 million that we've invested. So we're 100,000 back members may recall that over the last year they have taken a dip and were over £2 million down at one stage, and that, but they're obviously just book values. They only become crystallised when we actually need to sell them or take a decision to sell them. So they are, in all intents and purposes, book values at this time, and that. But it's good to know that, and I think the current one has shown that that has improved further. So. So a lot going on with the accounts, particularly with the COVID situation and the expenditure that was needed to make, particularly early on in the year. The income obviously remains an issue, and whilst we take snapshots of the situation, obviously the latest close down or lockdown will impact, and we keep the position under regular review and update the figures. So like car parks and that, we'd assumed that there'd be some sort of level of recovery, but obviously with the lockdown and businesses being closed, then that will be impacted further. But then thankfully, you know, we do have recourse to the government for support through the compensation scheme. That's all I want to say, Chair. Happy to take any questions.
Thank you very much, Trevor. Are there any? Yes, Councillor Mann.
Thank you, Chairman. I did have 3 questions, but Trevor's answered 2 of them about the salaries variance and the performance of rents. So that only leaves a question about on his executive report, the end of item B speaks of government support for losses of council tax and business rates that can't be recovered. I wondered, what the definition of unrecoverable was. How long do things have to go before something is decided that it can't be recovered, and this relief might then be subject of claim? Because we do have quite a long time period, don't we? So this any support from the government on those 2 specific items might be quite a long time coming. Is that correct, Trevor?
It's a very good question, Councillor Mann, because when this was first announced, we were mulling over as officers as to, that they talk about irrecoverable business rates and irrecoverable council tax, and our definition of that would be when we've been through a whole process and finally write them off that they are totally irrecoverable. But the government has said that they will make support available during the current financial year, or an assessment at the year end, and that we're still waiting for the final details on it, but it's basically looking at what you could have expected to have collected, and not allowing for growth in the district in terms of council tax and that. So it's going to be quite difficult whether we're going to get money out of it. Certainly on the council tax side, I think if we do get anything, it won't be a significant sum. Business rates, we may get something out of that scheme, but you're absolutely right. It is when it was announced, it was a strange one about saying irrecoverable losses and how they would actually do that. But they are going to make an attempt to look at what you were estimating you'd collect and what you actually end up getting in, and that, but make an allowance, or you won't get allowance for the growth in the number of properties and the like and that. So we'll have to wait and see at the year end, but I'm not anticipating a lot of money coming to Braintree, unfortunately, Councillor Mann.
Thank you, Trevor. Thank you, Chairman.
Thank you very much, Trevor, for that, and Councillor Mann. Councillor Santamaro.
Thank you, Chairman. Before you sort of spoke, Trevor, I was looking at the debtors, the balance outstanding, and obviously that looked inflated as to as compared to previous years. And I perhaps made an assumption that, you know, COVID had had something to do with that, but you kindly explained that that figure's obviously boosted as a result of the invoices to Essex County Council and Horizon 120. Taking that into account, if you were to sort of remove those invoices that kind of skew the figure, are we at a similar level as we have been in previous years?
I think in truth that we'll find that it has grown, as you would have expected, as you comment that, you know, there are difficulties out there and that, so we are still chasing the debts. You know, we still have the team making phone calls and the like and that, but I would say that I think that has crept up in terms of the actual amount of debt outstanding.
But are we talking a significant creep or?
I believe the two invoices that I mentioned are quite large, and that so I think it'd be small and that. But
okay,
if you want, I can give a written answer on that. I can get a more of a detailed analysis. So happy to do that.
Thank you. Thank you.
If I could just add, I was going to bring up the point that the debts outstanding, it had been anticipated they would be down to £600,000 as of the 31st of March of last year. So what, 10 months ago. And this is not including housing benefits, by the way, but in reality, it was more like 1.6 million. I think I've read that correctly. So, and I do appreciate that it's not as if we've got 100 customers and you know, a lot of them aren't paying us. It's a bit more, it's a lot more complicated than that. But I wonder if when you do your written answer, you could look at that as well, Trevor, that I say the target for 2019-20 was to reduce debt outstanding, excluding housing benefits, to £600,000.
Yes, I'll happily do that, Chair. Part of it will be invoices that are raised late in the financial year. So we do make adjustments for that, but I'll make sure I cover that in the written response to yourself and to the members of the committee.
Thank you very much. Are there any other members? Councillor Johnson.
Thank you, Chair. Trevor, yeah, thanks for that presentation. Just a quick question. Paragraph E, covering the rental income, etc. Are you experiencing any delays or requests to review payments, time factors, etc.? You know, there's a lot of people under very difficult situations at the moment. I'm sure some of the people in these premises will not be averse to having a few problems. Or is everything okay?
You're right. Certainly, when the first lockdown happened early in the financial year, then we were approached by a few of our tenants, and sort of extended payment terms have been agreed in respect of the rental for the current year. But I've not been told that there's any issues that those revised plans are not being adhered to, and that so we're not anticipating there to be an issue. But we have extended some payment terms to try and help certainly a small number of businesses. I think it may be about 20 or 30, but I can't remember the exact number. But certainly extended payment terms were agreed to some where we were approached, and that we didn't put it out there that we were offering it. They approached us, that they were having financial difficulties with cash flow and that, and so we came to some agreements.
Yeah. Thanks, Trevor.
Yeah, I was going to add as well to say that as I saw it in paragraph E, that and I appreciate this is the end of November, but virtually all the rent was being collected, and the businesses were occupied, or the premises were occupied, which is excellent in the circumstances. Any other members would like to make any comments on this? No? Well, I think that we can again thank Trevor as always for a good summary and a good report, and we can be thankful that compared to some of our, what do you call it, sister or brother local authorities, we are still in good shape. So I have mentioned to Phil the question of the one loan we have, the remaining local authority loan to Birmingham for £3 million. That is should be paid back in 3 weeks' time. So that will be as I understand it, the end of loans to local authorities for the moment, because there isn't that much of a market, or less of a market than there was a year ago. All right, so we'll move on then to the next item in the agenda, which would be number 6, which is the fraud update. And Angie is going to present this.
Thank you, Chairman, and good evening, members. So this report is an overview of the fraud affecting local authorities and details some of the approaches and the work undertaken by the Council to prevent and detect fraud. It also presents a corporate policy on the use of social networking sites for investigations, which really explains the legitimate use of social media and the point at which the council officers undertaking investigations would need to seek additional authorisation under RIPA. The RIPA policy was approved by the Corporate Governance Group at the last July meeting. So the public sector fraud risks are identified in paragraph 2 on page 16. And they are drawn from the Fighting Fraud and Corruption Locally strategy, which is produced by local government organisations, including the LGA. And it gives an indication of the fraud that's reported to them across all local authorities. So some of the items in there are not necessarily relevant to the council, but are obviously prevalent in local authorities. Paragraph 3 details the approach to fraud investigation in terms of the officer employed as a fraud investigator, the focus of his role, and the work that he does with the Department of Work and Pensions in respect of joint working. The council undertakes data matching. The majority is through the National Fraud Initiative data matching exercise, but also undertakes work with the Pan-Essex Compliance and Counter Fraud Scheme, and also subscribes to LOCTA, which is a local authority-based data sharing system. Paragraph 6 identifies the activity undertaken to reduce the risk of undetected fraud in business grants. And in addition to the list there, the National Fraud Initiative has also introduced additional matching for business grants. So we are soon to upload data to support that matching. Paragraph 7 summarises the policies that the council has which support its approach in relation to the prevention and detection of fraud. And paragraph 8 summarises the training that has been conducted and is planned. Obviously, Appendix 1 is the proposed policy. Chairman, I'm happy to take any questions.
Thank you very much, Angie. Do we have any questions for her? I was going to say that when talking about business grants, when very large amounts of money, over 30 million, as of whenever you wrote this, so it's going to be more by the time we're finished. going through to business and obviously as we've all read in the papers, a target for fraud. I think it does show the importance and the benefit of using local authorities or district councils anyway, that are familiar with the area and the situation, and indeed the companies to do this. It's a no-brainer. I think if people were sitting in London doing it, it's inevitable it'd be a different problem. So I think, you know, congratulations certainly to the revenue people. Sorry, what are the revenue and recovery team, and of course your team as well, Angie, in making sure that things go as smoothly as possible, or have gone as smoothly as possible. I know this is a question you don't like to hear or to ask, but can we be assured that fraud has not been an issue?
I don't think we can ever be sure that there isn't any fraud. I think we need to work on the basis that there is a risk of fraud and undertake relevant checks to increase the likelihood of detection and action to prevent or to reduce the risk of it occurring in the first place. So we need to be wise to the fraud risks, hence bringing this report to members tonight. So we need to understand where the potential fraud could occur and to look for it.
That's an excellent answer. You should be a politician. No, thank you very much. I appreciate it. It is a very sensitive area, but I think we can be satisfied and assured that you are looking after this well, and that we won't have any surprises. Are there any other questions or points? Councillor Euston.
Thank you, Chairman. I did put it on the chat thing, but I'm not sure if I've done it right. But
yes,
if you see it again, it's only just once I want to speak.
Fine.
So, Angie, 2 questions, please. One on point 3.2, fraud investigation. It says the main emphasis has been on council tax support and single person discount. I'm assuming that's because that's where the biggest number of fraud attempts are, but not necessarily, but perhaps you could enlighten me on that. And the second one is on page 19, item 6.2, the last area, says additional work is planned to review rejected applications for false statements. Could you give us an idea of the percentage of rejected applications, and are they all rejected for false statements or suspected false statements, or is it just some of them? Thank you.
Thank you. Okay, so the emphasis on local council tax support and related fraud, that's historically where we've had a lot of fraud, and every local authority has been in that position. So many years ago there were incentives, if you like, for investigating and sanctioning benefit related fraud, which obviously became local council tax support. So historically we have a high number of applications from people on a low income, and yes, there is a high number of potential frauds in those areas. So yes, but it doesn't mean that we shouldn't consider the possibility of fraud in other areas.
Yeah.
And in respect of the second point, I don't have the figure of the percentage of applications rejected, but they can be rejected for a number of reasons, for their circumstances not meeting the scheme criteria. What we're looking for is if there's a potential for a false statement to have been made as part of the application, which we can then prove to be false. And that's obviously very different to somebody who's made an application and been completely honest, but just not eligible.
Okay.
Okay.
Thank you.
Thank you very much, Angie. Councillor Johnson.
Sorry, I too have been using the chat function but without much success. Just a question really in general terms. We're monitoring social media, etc. in general. We've got to be extremely careful what sort of information I would imagine you ask for. Do you think, it's perhaps a strange question, that the council itself is being monitored by external agencies? I mean, are you aware you've got to stick within certain guidelines when you're monitoring? And do you think that the council is being watched or monitored?
Okay, so to take your first point, the when we talk about monitoring social media, the reference that I'm using is monitoring or the use of social media in respect of investigations, which is very different to, for example, our communications team that might keep an eye on what's being said about the council. So that's some monitoring of social media in one sense. We're specifically looking here at the use of the media to support the building of evidence in relation to investigations. And yes, there are very clear rules as to what we can and can't do, and that's the purpose of the appendix, the policy that we're putting forward. Are we being monitored by others? Potentially, but I'm not in a position to answer that question fully. But there will be people that are watching what the council's doing, and there will be the potential for cybercrime. So obviously criminals are looking for opportunities of ways to get in. But in terms of any more detail as to how we're being monitored, I don't have that information, I'm sorry.
Okay, thank you.
Thank you, Councillor Johnson. Angie, are we aware that Brexit will or has any changes or can make any changes in this area of legislation? I know the generally privacy, that's not the word, what's the word I'm looking for? Yeah, in terms of internet, I believe there've been some changes.
So the policy that we're proposing is correct as we are at the moment. If there are any changes brought into our local legislation, then we will obviously update the policy and bring it to you again.
Sure. Yeah, I was just asking if you were aware that anything sort of major might be coming down the pike, but that's for another day. All right, members, any final points? And if not, I'll thank.
Chairman, I understand Councillor Santamoro has a question.
I've just seen it. As you know, I think you know I'm not in the. Well, you probably guessed I'm at home, so things don't work quite as clockwork as they do normally. Please go ahead, Councillor Santamoro.
Thank you, Chairman. Councillor Euston picked up really the point that or the question I was going to ask with regards to just at the end of section 6 about the additional work being planned to review rejected applications for false statements. My question revolved around if an application has been rejected, but a false statement has been made, what sort of sanctions can we impose? What do we do? Because presumably where you've given a grant, then you might prosecute, but where you've not given the grant, what action can we take?
So obviously depending on the severity of the false statement and the potential that if undetected it could have given financial gain and so on. We do have provision under the Fraud Act to prosecute, and we have used the Fraud Act for prosecutions before. So simply making a false statement would be sufficient, but we would apply the public interest test and only consider that action where appropriate.
Okay, thank you.
Thank you very much. So I'm looking at the chat, and I think that's was the final point. Thank you very much, Angie, for that. And we'll move on to the final report, number 7.
Chairman, if I may, the report actually sets out a recommendation to approve the social media policy. So I just wondered whether it'd be worth putting that to the vote before we move on.
My apologies. Can I take silence to be approval? And there's dead silence. So yes, we note and approve. Thank you very much. So this is the last report, number 7. And I think before I introduce, I will just check. We don't need to approve this, do we? This is just a, no?
Sorry, Chairman, I was just looking through the report myself. I don't believe there's a firm recommendation. It's more around noting, but I'm sure Phil can clarify that as he introduces the report.
Please go ahead, Phil.
Okay, yep. Thank you, Chair, and good evening, members. So so basically this report, this is the draft Treasury Management Strategy, which the group is receiving basically to give opportunity to make any comments or propose any amendments that they may wish to pass on to the Cabinet Member for Finance and Performance Management, so that then the final strategy will be wrapped up with the council report when the council sets its budget in February. I think the style and content of the document will be quite familiar now, because I'm sure many of the group have seen this report as it's an annual report. As previously, it's also the Treasury strategy is subject to quite a comprehensive statutory framework and codes of practice issued by the Chartered Institute of Public Finance and Accountancy, and as ever is subject to the external influences of essentially what is going on in the world at any point in time. So there is a brief summary of economic and market events that's attached to the report, but as with all those matters, things very quickly become out of date and superseded by circumstances. So the strategy effectively sets out the expected level of activity of the council over the medium term for any borrowing or management of investments. And I think this is quite well summarised in Table 1 of Section 4 of the report on page 31. So this table provides a balance sheet analysis of the council's position currently as forecast, and how it's forecast over the medium term. What the table actually indicates through a measure called the capital financing requirement, that there is that as a result of the council's ambitious capital programme that it's currently got over the medium term, which is in excess of £90 million over the coming years. The requirement, the underlying need to finance some of that capital programme from borrowing is increasing, and that's recognised in the capital financing requirement, the CFR, which is the first line on that table, and is then sort of reflected again once you take out leasing arrangements in the loan CFR, which is on the third line of that table. So that is effectively saying that of the expenditure we're incurring on our capital program, we're not actually financing all of that expenditure from our own capital resources. There is an element which will potentially be met from borrowing. Now, the actual amount of borrowing that the council might undertake may differ from that CFR, and the fourth line on table 1 shows the current and projected level of external borrowing, and that shows that we're looking to move from a position of our current borrowing of £6 million, increasing over the medium term to a level of around £18 million. Now, the difference between what we expect to borrow new on that line and what the CFR is suggesting we should, or we have an underlying need to borrow for capital, is reflected then in the line internal borrowing, and which is effectively, I would akin to an offset mortgage. Effectively, we have a borrowing requirement, but we've actually got savings that we've got set aside in terms of reserves and balances, and we're actually using the money that those reserves and balances comprise to defray some of the borrowing need we've got. So you can see the internal borrowing increases significantly in the current year and then starts to reduce over the medium term. The reason for that profile is largely to do with the Horizon 120 infrastructure project, where the primary source of funding the expenditure that we're currently incurring on that is from the sale of the serviced land plots. So we are expecting to generate capital receipts from that project that will effectively pay for the project itself. So in the short term, we're going to borrow, but that will be repaid from those capital receipts. Now, the consequences of increasing our internal borrowing in the early part of that table means that whilst we are also projecting a level of reserves and working capital over that period of, by the end of this year, around £45 million, we will actually have investments, or we're projecting to have investments of only around just over £23 million, and then increase in later years. So that's the consequence of internal borrowing. It actually reduces the amount of cash that the council has available to invest that the reserves that we hold would otherwise suggest we would have. The strategy provides an alternative scenario to that, which is set out in table 2 on page 32 of the report. And this is just provided as what could be an alternative scenario to our planned borrowing. And this is reflected in a measure which is referred to as the liability benchmark. And what this assumes is that we actually keep our level of investment balances to a minimum of £10 million, or to a level of £10 million at the end of each financial year. And what that actually means is that on that basis, we wouldn't have any requirement to increase our external borrowing in the short term. But what it would mean is that we would have to reduce the amount of money we have held in our strategic pooled fund investments, and that would have an overall adverse impact on the general fund revenue account. So somewhere in the middle of those two scenarios is probably where matters will end up. and as always, we will obviously take account of circumstances as they change over the course of time. So that's really sort of the sort of metrics of the strategy, and then the strategy goes on in terms of section 5, where it looks at the sort of borrowing strategy that would be undertaken with any new borrowing that we might undertake. The key objectives there being that any borrowing is affordable and is sustainable over the long term. There is an incentive to borrow short term or to internalize, as I mentioned, because that is actually a lower cost option to undertaking any long-term borrowing. But then you have to weigh that up against having the certainty over your long-term financing costs. So that those are considerations that will need to be made during the course of the year. And Arlene Close, our Treasury Management advisors, will sort of keep us informed of whether they think that strategy is still the appropriate strategy. The sources of potential new borrowing would typically come from the Public Works Loan Board. It could come from local authority loans, to local authorities lending to each other, or it could come through more traditional routes through capital markets from banks and other financial institutions. The strategy does note that the Public Works Loan Board, which would typically be the source of lending for local authorities, they have just revised their lending policy, and whilst with that revised policy, they have cut the lending rates to local authorities by 1%, which is welcome news. This is actually, however, conditional on local authorities not borrowing purely for yield. And if authorities are planning to borrow purely for yield, and this would, a typical example would be to be buying investment property, then the PWB will not lend to the local authority, will not lend to a local authority in that position for any reason. So the strategy recognises that new lending policy, and obviously going forward, decisions around borrowing would have to be taken with that new lending policy in mind. Section 6 of the report deals with the investment side of Treasury management activity, and again, table 3 on page 34 of the report, that sets out what we forecast the average level of investment balances will be in each financial year. These are higher than the amounts in table 1 because typically during a financial year we have an influx of cash coming into the authority in the first half of the year, and then expenditure catches up in the latter half. So we typically end up with a higher in-year average investment balance than our year-end investment balances would typically be. We were expecting in the current year investment balances to reduce as the capital programme has accelerated on some of the major projects such as Manor Street and Horizon. But the year has been impacted by the monies that have come through from government that's been passported through local authorities to provide the business support grants and other support to households as a result of the COVID pandemic. So that has sort of somewhat distorted the cash that we had available for investment in the current year. We do anticipate those investment balances reducing next year and before then starting to creep up again in the later part of the medium-term programme. In terms of strategy on investments, again, security and liquidity are the key points. So ensuring we get money back when we've invested it, and also having the money available when we need it. We continue to diversify, and that will continue to be part of the strategy. And the strategy continues to have the split between our strategic pooled fund investments, which are in a range of funds dealing in equities, property, and diversified funds that invest in a mixture, along against our short-term investments that would typically be for liquidity and in-year cash flow purposes. Table 4 of the report on page 35 sets out the investment counterparty limits. So it sets out duration limits, individual limits, and aggregate limits on certain sectors. Those limits are very much in line with what we've set in previous years. The only difference to note really is on money market funds, where previously we had an aggregate limit, whereas now we're saying that could be unlimited, albeit it would be subject still to no individual fund having more than £5 million invested. There is a comment about negative interest rates, and whilst at the moment the UK bank rate is not negative, this cannot be totally discounted or ruled out at this point. You have seen negative rates in the market, particularly on things like the short-dated gilt yields. And it also on rates that we've been offered by the Debt Management Office account, which is part of the UK government, and they've been charging charging negative rates for short-term deposits from local authorities. Money market funds at the moment, we've got a number of money market funds that are close to zero, and so there is a real prospect of those returns on money market funds turning negative. And in fact, I'm speaking to a number of money market fund providers today, all were basically saying that there is the high likelihood that money market funds will start paying negative returns, in which case investments would turn to an accumulating share class as opposed to the current share class that they are currently. Jump into section 9 of the report. Page 38 just sets out then the projected or forecast financial implications of the treasury management, and what table 6 shows is that our income from investments is projected in the current year and going forward to be reduced from that we achieved in 2019-20, and that's predominantly because of the cut in dividend income that we're receiving from the pooled funds, the ultra low interest rates that we are receiving, but also the fact that we are reducing our level of investment balances through the internal borrowing for the capital programme. The 2021-22 reduction for the purposes of the budget is being mitigated at the moment in the budget proposals so that there is a treasury a drawdown from the Treasury Management Reserve of 350,000 is proposed, which sort of covers some of the shortfall in income that we are expecting. And in terms of interest paid, currently on the £6 million of borrowing that we currently have on our books, we pay £282,000 of interest on that at the moment. We are expecting interest on borrowing to increase as the external borrowing figures demonstrated that we would be increasing that the level of borrowing, or it's planned to. But the increase in costs from that interest would be met from the income that's generated on the strategic projects such as Manor Street and the recently approved Horizon 120 Enterprise Centre. So I think that was really all I wanted to add or draw out from the report, Chair, but happy to take any questions.
Thank you very much, Phil. Any members have any comments or questions? Because I do. Councillor Euston.
Thank you, Chair. Thank you, Phil. That clarified a lot of things for me that I didn't understand when I read it the first time. So thank you very much. On the PWLB, does that effectively exclude us from any borrowing from them, or just for, I guess Horizon 120 would be classed as an investment for yield? Maybe not, I don't know. But does it exclude us from any borrowing from that source? And the second bit, sorry, the second bit is really because of items on the news about local authorities declaring various emergencies, which in my sort of language means they're going bust. We don't seem to be anywhere close to that, thankfully. But at what point would we become overstretched if something like COVID went on for another year or two, even? And how close would we be to that now? If that's a strange question, but nonetheless, thank you.
Okay, if I take the first one, with the PWB, so as part of the lending policy, the PWB have sort of produced guidance on what they consider to be debt for yield, and also those things that they consider that they would continue to support. So one of the areas that they would continue to support is around economic growth and such like. So and the definition for debt for yield is that you're sort of more or less solely doing something for debt for yield, and it's not actually having any sort of other benefits other than just generating you money. So I think there's probably some strong arguments on some of the strategic projects that we're doing them more than just for yield, that they're actually got with Manor Street a bit of a placemaking element, and with Horizon, it was around bringing employment site, which the district badly needs, and the private sector wasn't delivering. So yes, I think there's some definitions and guidelines that PWB have issued. Ultimately, it will be for the Section 151 officer, Chris Fleetham, to effectively state or certify to the PWB whether, in his view, we are incurring debt for yield investments that we're looking to finance from borrowing, and if that was the case, that would preclude us from that debt. So I'm sure it's going to be an area that's going to develop because it's not, there's no sort of categoric definition of what constitutes debt for yield. I think there will be some areas of sort of debate on what that means. So, in terms of the second one, I think there's the issue about financial. I suppose that's financial resilience with COVID and the potential pressures there. I mean, that I would just say. I mean, Trevor might want to come in on this, but one of the issues that is considered as part of the budget setting process is around the robustness of budgets and also the council's adequacy in terms of its balances and reserves. And the Section 151 office have been satisfied that those are robust enough to manage sort of the risks that we anticipate going forward. And notwithstanding that, so far government have also stepped into the fray and provided some significant funding to local authorities. So I think the issue about when you get to the point where you're probably in trouble will largely depend on where you are in terms of your balances and reserves at any point in time, and also whether you're actually able to set a budget that is actually balanced, i.e. your income and expenditure has been identified, and that you're not just carrying savings sort of aspirations that you don't haven't really got a chance of achieving. So I don't know if Trevor wanted to add anything on that one, or if the chair permits.
Of course.
If I may, Chair.
Yeah.
Like Phil has pretty much covered it, but just to put it into context, the balances that we're anticipating at the end of the next financial year, based on the initial proposals for the budget, we've got unallocated balances of 4.7 million, and we do have substantial earmark. Now, whilst we say they're earmarked for purposes, they could ultimately, a decision could be taken to revert that decision in terms of the need for it, and therefore that could be channeled to support the revenue account at that time. But the key question, as Phil's outlined, is about the robustness of the estimates that are set and that they are realistic. And I think our track record has shown that we do actually deliver on what we say that we're going to save, and that's so. Ultimately, it comes down to these authorities not having enough income to support their expenditure, and therefore they then have to rein in their expenditure. And you often hear them saying they're only spending on statutory functions, and that's the implications of that. So, at this stage, and that the council does have significant balances that it could draw on, and also in terms of the estimates going forward, then they've been put forward diligently, and the savings that are assumed have been achievable. Thank you, Chair.
Thank you, Trevor and Phil. And of course, we do own a very, very large amount of value worth of land and buildings, I guess. Do we have a sort of broad brush amount, just for curiosity, Trevor or Phil? Our capital.
On our balance sheet, I believe our sort of assets, property assets and such, are sort of valued at somewhere around 80 million or something like that.
I remember reading, I think Basildon, which has a lot of challenges, and they've got borrowings of hundreds of millions of pounds, but they say their assets are worth $1 billion. So, there's different, which is a big shopping centre, most of it, I suppose. Anyway, I just thought I'd mention that point. Any other points that members would like to raise? Countess Santamaro, yes.
Thank you, Chairman. Just a general question about Treasury Management Advisors as a whole. I know obviously Arlene Close will review come 2022, but with every term that we have advisors in place, is there a way that we can compare their performance in terms of their investment advice? What's the benchmark? How do we know whether they've given us advice that outperforms, you know, other advisors?
Yes, that's not an easy thing. I mean, the thing with the advisors is it's a very concentrated market for local authority treasury advisors. So essentially, you've got Arlene Close, and you've got Link Asset, who used to be part of Capita, and then prior to that they were known as Sector. And as I was saying earlier to the chair, it's the market's quite incestuous in the sense that the same people seem to work for those two firms, and they sort of switch between them. I think the reason we appointed Arlene Close is I think that their approach seemed to better align with the council's sort of strategic direction, particularly around the pooled funds. So they've been quite strong advocates of that being appropriate for local authorities, particularly in the low interest environment that we've had for, you know, over a decade now, where interest rates have been really low. And in order to achieve, you know, at least an inflation beating level of performance, you know, authorities have had to sort of look different, but with a measured approach in terms of managing risk. So Arlene Close have been very much supportive around the investments in the strategic pooled funds, whereas Link Asset, when they came across that they were less less keen about those types of investments. So I think you know that's you know, it's very difficult to say, well, you know, what would our performance have been if we'd gone with Link. I suspect we wouldn't have had our investments in the strategic pooled funds because you wouldn't want to employ advisors who were, you know, who were saying, well, we don't think you should be doing that, so we probably wouldn't have done it. And I think those pooled funds have demonstrated, you know, year on year since we've had them, the returns have been in excess of 4% per annum, which has far outstripped the short-term cash investments or anything else that we might have looked at. And whilst we've had some volatility over the years, that's been the key element of holding those investments for the long term has allowed us to manage that volatility in terms of market values. So as long as we, you know, keep to that approach, we would hope that those investments are going to continue to yield and perform for us. So I think our investments are probably achieved more than we would have done had we gone with Link. Yeah.
Thank you.
Thank you very much, Phil. Does that answer your question, Councillor Santamora? Yeah, thank you. I had a couple of things I'd like to suggest. You did at the beginning, Phil, say that one of our, how can I put it, one of our tasks or one of our potential tasks is to make suggestions to put to those in the cabinet who deal with this area, and these aren't necessarily points to mention to them, but I'm just looking here at some of these tables you've got. For instance, table 1, and there are a few of them that are just set out in the same way. And I was just thinking that it would be interesting, and this wouldn't take any work, to have an initial column that would say 31st of March 2020 forecast, and then move on to the actual for the year, and then after that the forecast. I think because if certainly for us here, it's useful to see how you actually performed in those, those different areas. So that's I hope a small point, which for us, otherwise we've got to go looking back into old agendas and that. Is that okay?
Yes, I mean, just on that. So this is the strategy. So this is sort of setting out what we think will happen sort of next year and going forward. So all I would just say is you will get a mid-year report and then a year-end report. So on those reports, I would typically include what it was we had in the original strategy, what it was at the mid-year, what it is at the mid-year stage, and then what it is at the end of the year. So there is an element of that will come through in the reports that we have that will come through to the governance group in terms of the mid-year treasury strategy.
That's fine then. No,
and the annual report. But yeah.
Okay. Just at the bottom of that page, it says maintaining investment at a level that ensures the council could retain its professional status for investment activities. Broadly speaking, what level is that? Is that an amount per annum or an amount invested, or?
Yeah. So this is the sort of categorization under Markets in Financial Instruments Directive, which was a piece of European legislation that we've signed up to and we'll continue to do so. And this was categorizing investors, so if you know where they treat them as retail or professional, and the requirement to be treated as professional has generally been taken that you have a minimum level of £10 million of investments. And along with some other criteria, but that's sort of essentially taken as a sort of a minimum point by which anybody who wants to be recognised as a professional investor under those regulations would have to hold.
Okay, thank you very much. And then on page 35, where you have on 34 and 35, you've got the approved investment counterparties. And I think we've actually discussed this previously, maybe last year, but it says foreign, 5 million per country. A country, there are all sorts of countries. Would we wish to perhaps qualify them in some way? Say G7 or European or something? I can't imagine us investing 5 million in another country, but if it's down here, then perhaps it should be a bit clearer.
Yes, and I'll take that point, Chair. Or just say is that the individual counterparty is assessed based on their initially based on the counterparty's credit rating, but then there is an element of sovereign and that rate assessment within that. So the counterparty lists that we would get from Arlene Close based on our policy would sort of make those distinctions between the countries that they would advise that we shouldn't should basically they would be comfortable with this investing with, as opposed to those that they wouldn't. So that is all sort of part of the matrix of stuff that is looked at in terms of compiling that counterparty list. Yeah.
Is there any stricture, is that the word, on local authorities investing abroad? I'm just curious.
We can only invest in like sterling, really, and so we're not sort of invested in foreign currencies. But yeah, I mean, typically the banks that we would invest with that we regard as foreign are usually operating in London, you know, are in the operating actually in the UK. But no, I mean, there's nothing to prevent us in theory, but part of the sort of matrix of information that Arlene Close will use in conjunction with our sort of these limits and our policy would be to structure a list of counterparties that they would be comfortable we could invest with, and some of those will be sort of originated in foreign countries. So it's not that we're looking for the foreign current. It's not that we're looking to invest in a foreign country per se, but the counterparties are just originated in those countries.
Okay. All right. Thank you very much. No more contributions from members? No, well, if not, then thank you very much for that, Phil. As usual, very informative and useful, and thank you for your explanations, yourself and Trevor. So those that brings to us to the end. We have urgent business. I had just a couple of things I wanted to say. One that just reminding everyone we have the pleasure of seeing each other on the 26th for the Constitution, to talk about the Constitution. So look forward to that. More related to what we're doing here, you will recall that we should have by now, or some time ago, approved the external budget. External audit being done by our auditors, BDO, and there have been delays. A lot of it to do with the COVID, but also some legal issues which are being sorted out, and questions about the contractual arrangements. And again, you might recall a couple of meetings ago, I requested that they put together an action plan to address this question to do with Manor Street, and this will be presented to the group along with the audit, which. And I hesitate to say anything. It could be 2 weeks, it could be 4 weeks, but they're getting near the end of it. So that will be another meeting, maybe a special meeting. I'm not sure, but we've still got quite a lot on the agendas going forward. But thank you all for your patience anyway. So. I think that brings us to a halt. I'm looking here at Kim. Is there anything I've missed?
No,
I didn't have a script.
You've done very well without a script, Chairman. You'll have it down to a pat on the next occasion. In terms of business, that's the business concluded for today. So if it's okay with you, Chairman, I'll hand over to Chloe to bring the YouTube channel to an end. And do the formalities that she needs to do.
Yes, I should say we bring it to a close at 8:38, according to my watch. Thank you very much, everybody.
Lovely. Thank you very much, members. Before I ask the webcaster to terminate the broadcast, I would like to remind you that the Council will retain performance data relating to your connection to the meeting in the event of a legal challenge to this new way of holding meetings. Can the webcaster please confirm that the broadcast has ceased?